Lesson 4B, Intro to Technical Analysis. In this lesson, we're going to be doing a tutorial on how to conduct technical analysis, what types of indicators to use, what types of things to look for, and where to go to actually do this technical analysis. So be prepared to follow along. You can pause this video and follow along if you want to, but without further ado, let's get started. First thing I'm going to do is go up to the website. So the first thing that I'm going to do is I'm going to go up to this website browser and I'm going to go to a website called TradingView.com. So that's TradingView.com. And they just recently updated their website to make it look a lot more professional and a lot better and a lot more personal for traders. So what I'm going to do here is going to look at the top menu. Up here you see this tab called Markets and then Cryptocurrencies. So I'm just going to click on Cryptocurrencies. Now from here you can see a lot of information about crypto and different things that other people are doing. This is more of a social charting platform. So what I'm going to do up here is I'm going to look for the search, go over to crypto, and I'm going to look for Bitcoin, US dollar, and we're going to look for Binance US. So what I'm going to do is go over here to all sources, and I'm actually going to search Binance or BIN. Binance US will come up. I'll click on that, and then we'll go to Bitcoin USD, and we'll go over here to launch chart. So here, as you can see, you'll see the Bitcoin price action, the Bitcoin market with the chart, and I have some indicators here. I'll delete those and show you guys how to get to those. So let's take a look at what we have up here on the top. So in the top left, you have BTC USD. This is the market that you're currently in. So the chart that you're currently looking at is Bitcoin over the US dollar. The next thing we have here is a D. This is your time interval. That means we're on the daily time interval. So each of these candlesticks represents 1 day of trading volume. And what we have here with the candlesticks, if you're not familiar with candlestick trading, each candlestick represents the entire time interval that you're on. So if you're on the daily chart, which we're on right now, each candlestick, you see this red one right here, represents 1 full day's worth of trading. Now we can switch this up here. Let's say we go to the 1 hour chart. Now again, each candlestick, as you can see, I'm looking at this green one here, each candlestick now represents only 1 hour. So the chart and the price doesn't change. You're just changing how often you're looking at the price action when you change the different time intervals that you're looking at on the chart. Now next, we talked about the candlesticks. You can change them from candles to bars. The bars and candles are the same, they just look different. You also have a line, which is what you're probably used to looking at if you're not familiar with candlestick trading. But you see with the line, you don't get to see the high, the low, the open, and the close. When you do candlesticks, you actually get to see where the market opened at, where it closed, what was the high, and what was the low. So that information is all here in this one candle, whereas in the line chart, you don't get to see that information. You just get to see the price movement and the price action. There are also some other advanced ways of looking at the chart. You've got Heikin-Ashi. We're not going to get it to that in this tutorial, but this is also a potential good way to see market trends and where the market is moving and if it's going up or down. Again, we won't get to Heikin-Ashi in this tutorial. We're going to be focusing on the regular candlestick. Now we look over here to indicators. So this is what we're going to be focusing on. What indicators are you going to use in order to conduct your technical analysis? So the first one we're going to take a look at, and you can see, you just click on indicators. I've got some favorites here, but I'll show you guys how to get to these indicators. It's very simple. We talked about the MACD, moving average convergence divergence. Search for MACD, that will show up, and you can click on that and your MACD will show up at the bottom of your screen, and you can move that here as well. So you can move the panel up to be above the market or move it down to be below the market. Now what we're looking at here is an oscillator. As you can see, it's oscillating up and down, up and down, up and down with the market. So as we can see, we've got our signal line, which is this red line, and then we've got our MACD, which is the blue line. Now as we can see, the MACD has crossed below the signal line. That means we're in a downtrend, or this technical indicator indicates that we could be moving in a downtrend. Now as we can see, the market hasn't really moved that much in the last few days, and this is where we can get into actually analyzing technical analysis and these indicators and seeing that they're not going to be 100%. They're not always going to tell the complete story. A lot of times you're going to have to look at multiple indicators. You might use 3 positive signs on 3 different indicators to determine whether you want to make a trade, and that's where you might feel comfortable. I don't think you should look at one indicator and say, oh, this indicator says the market's going to go up, and just automatically think that the market's going to go up. You have to look at multiple indicators, and as we can see, we're in a slight downtrend on the MACD, but in the actual market, we're sort of just trading sideways. So you really got to look at it and get used to MACD and any indicator that you want to use for trading. But let's take a look at another example in the MACD, where here we can see the blue line significantly crossed below the signal line, and we can also see these bars on the MACD as well, where the red bar is increasing. That shows increasing downtrend in the market. As you can see, the bar started to lighten up. Eventually we stopped the bleeding and we're trading sideways for a little bit, and then continued around to this area. As you can see, the MACD crossed above the signal line. We went into a little bit of an uptrend. So the MACD is not going to tell you the full story, but that's basically how you're looking at the MACD. You're looking at the strength of where the market is headed by these green bars or red bars, and you're also looking to see, is this market in an uptrend, by looking at if the MACD has crossed the signal line. You can also change these indicators as well. For the MACD, since it's an oscillator, we're going to look at it here. You hover over the name, you can go to settings, you can change the signal line color, you can change the MACD line color like we have here, and you can change the bar color as well, and all these settings here. I wouldn't mess with the original settings for the MACD because you can determine how far back you want to track and average. I wouldn't mess with that. Most people just use it as it naturally is on TradingView. But you can mess with the colors so that you can see it a little bit better. So that's how you change these indicators settings. Now the second thing we're going to look at, we're going to take the MACD off here. The second thing we're going to look at is another oscillator, and we're going to look at the RSI, Relative Strength Index. I believe you can just search RSI and Relative Strength Index will come up. So we will add that to our chart. Again, it's an oscillator. It's going to appear at the bottom of the chart. Now what we have here is this purple area. Now you can see that the MACD goes from about 20 to 80. I believe it goes from all the way from like 0 to 100. But the main area we're going to focus on is the 30, where this purple line is, to the 70. So if your RSI is within the range of 30 to 70, that is considered a healthy market. So the market isn't overbought and it isn't oversold. So for example, right down here, when we see that the RSI floats below the 30 level, right here, and these settings are popping up blocking it, But since this RSI was below the 30 level, the market was considered oversold. So that means people that are trading with the RSI are looking at this and saying, hey, this market is oversold. I'm going to buy because there's value to be had. Too many people are selling. The market is oversold. I'm going to buy because the market is due for a come up, so to speak. Now, as we can see, it took a little while, traded sideways on the actual chart, and even went down a little bit further. But eventually you go up on the RSI, and you can see that it then broke through the 70 level on the RSI. Now, what the 70 level means is if it's above 70, then that means that the market is overbought. So a lot of people might come in and say, hey, the RSI is over 70. This market is now overbought. I'm going to sell because the value is no longer there. There's too many people buying, and the value is actually not there within the market. So that's basically how you read the RSI. If the RSI is below the 30 range in this purple area, that means you should probably buy because the market is oversold. And if the RSI is above the 70 range, you might want to look at selling, or at least keep an eye on the market because the market may be overbought. So let's look at some historical data. As we've seen for Bitcoin, Bitcoin has had many good days and a lot of good time. We were seeing in this area back in 2020, November, the RSI was above 70 and actually stayed above 70 for some time. It was oscillating around the 80 to 85 range. So then it eventually broke back in, but then came back up around to the 85-90 range. So while the market's doing good, there are some times where the RSI will trade well above the 70 range, and there's really just no rhyme or reason. Again, you can't look at one indicator and say that this is the way the market's going to go because this indicator says so. You shouldn't look at it like that. You need to get confirmations from at least 2 to 3 to 4 different indicators to determine whether you should place a trade. So that's how you look at the RSI. Below 30 is not that good. Above 70 is also not that good. You want to see the RSI in the range between 30 and 70, and that's what you got to look at. So let's go back. What we're going to do now is we're going to look at an indicator called the Bollinger Bands. Now, the Bollinger Bands are not an oscillator, excuse me. So we're going to take a look at the Bollinger Bands. As we can see, it's not necessarily an oscillator, so it appears on the actual chart. It doesn't appear on a screen below the chart. And as you can see, the colors are blue for the outer edge of the Bollinger Bands and orange for the signal line within the Bollinger Bands. We'll take a look at that later. Now, what Bollinger Bands seek to do is they seek to see whether the market is overextended. So with the Bollinger Bands, what they look at is once the market extends above the Bollinger Band, like we see here, the market was outside of the upper Bollinger Band and it quickly jumped back in the Bollinger Band. The market wants to stay within the Bollinger Bands. So if it's ever outside of the Bollinger Band, you know that it's going to jump back into the Bollinger Band very quickly. So we see it again here. It eclipsed the upper bound and it jumped back in. As you see here below, we were dipping below the lower bound, jumped back in. Dipping below the lower bound, jumped back in. Went above the higher bound, jumped back in. Went below the lower bound, jumped back in. So once you see the market go outside of the Bollinger Band, you know that it's going to go back in. So if you're going below the lower bound, the market's going to go back up into the Bollinger Band. And if you're above the upper bound of the Bollinger Band, the market will soon go back in to the Bollinger Band. And that means the market's going to come down to be able to come back within the Bollinger Band. So that's how you look at Bollinger Bands. How do you read it? And it's actually a pretty decent use case because, as you can see, it's very reliable. Almost just about every single time that the market is outside of the band, it comes back in. So when you see that market going out, so right here we're in the Bollinger Band right in the center. But once you see this market creeping above or creeping below, you know that it's going to come back in eventually and probably very soon. So if you see this orange line in the middle of the Bollinger Band, that's a moving average. Now sometimes people will trade the moving average, so you'll look at maybe something like right here where this orange line is actually acting as resistance for the market, where it's acting as resistance here. We broke above, and now we can kind of see the orange line is actually now acting as support. So that's what we're going to do. We're going to get into support and resistance right here if you're not familiar with support and resistance. But one thing to look at is the middle line in the Bollinger Band could actually act as support and resistance too. So those are 2 to 3 ways you can use the Bollinger Band and actually have success in trying to predict where the market's going to go. So right now we're going to take this Bollinger Band off, and we're actually going to use these drawing tools over here on the side. So what we're going to look at is just this line tool. So you've got a trend line, arrow, array, different types of lines, different types of drawing tools that you can use. We're just going to look at a simple trend line. So what we're going to do is we're going to draw some support and resistance lines. So right here I'm going to draw some support. Now what I would do if I was looking at support, I would look for something maybe right about here. Something right about here. You can click to draw your line and then hold down the shift key. That will make it a straight line. Then you click again. So as we can see right here, this green line is the level of support for the Bitcoin market. Now what else we're going to do, we're going to draw a resistance line. So I would draw a resistance line somewhere around here. And a lot of times you don't necessarily want to draw singular lines. You want to have entire areas of support and resistance. But this is just a basic level of knowledge on what support and resistance is and how you can draw the lines and how you can use that to trade the markets. So since our support line is green, we're going to change our resistance line to a reddish color. So if you want to change that, you just go back up to here, which is probably your arrow or your dot. I like using the dot. Click on the line and you can change the color here. You can change the depth or the weight of the line as well. So as we can see here, we've got a line of support and a line of resistance. What does support and resistance mean? So let's see, we've got resistance here. This means that the market is going to resist this level of price action. So as we can see, our resistance line is at about 59,100, let's say. So that means when the market gets to 59,100, we're going to have some resistance there. It's going to be hard for the market to get past that level. Now, why is that? It's because we had previous price action here, right, around April 2021. Now we're over here in September 1st. Once we get up to 59,000, we're going to have some trouble getting past there because there's a lot of resistance here, as we can see. So let's actually see if we can extend this line. All right, we can extend this resistance line all the way over. As we move throughout this market, maybe we go up and up a little bit. It's going to be tough for us to get back around or above this 59,000 level because it was tough for us to do this in the past. So what we look at when we look at markets is past history. Did we have trouble reaching a certain price in the past, well, when we get to the future or the present, we might have trouble reaching that price again, because the markets, again, technical analysis trades off of past history. So you look at what happened before and you use that as a judgment to see what's going to happen next. So that's what we're looking at here. We've got this red line as resistance. It may take a lot of money and price action to boost above this resistance. Now, when it does, as you can see, we don't have much above this 59,000 level. All right, so once we break above this 59,000 level, there's nothing here to stop us, and the market is just going to establish itself wherever it wants to establish itself. So once we get past, this 59,000 level, or maybe the 65,000 level, there's nothing here that's going to stop us, because there's no previous price action up past 65,000. So there's nothing to say that Bitcoin couldn't get to, let's go to, 75, 80, 92. Let's just say it reaches this line here at 92,000. There would be nothing to stop it from going there, because there's no resistance above this level. So basically everything that I've said with resistance also works with support. As you can see here, we've got our support line, and we'll extend that out as well. And so the same thing works with support, right? We had some support here. We broke below it just a little bit, but the market held support, tested resistance, went back down to the support level, support area, bounced off of it, tested resistance, came back down to the support, bounced off of it. Now here, this is the, about 1, 2, 3, 4, fourth or fifth time that we tested this support level. Eventually the market did break down, and it broke down significantly. And that's what will happen with resistance. When you eventually break resistance, it will break up significantly. So the same thing with resistance is going to happen with support. So this is what we'll see. Then we came down here and we even tested another support area. So we can use this as another support area. And I'm just drawing lines here, doing my own technical analysis. Alright, so we can change that to green for support. So as you can see, we bounced here, bounced here, bounced here, bounced here. Eventually, we weren't able to go through the support. We bounced back up. And as you can see, there was nothing here stopping us. So the market quickly jumped back up to its next level, which was our support. But now, this level is resistance. So support can turn into resistance, and resistance can turn into support. So I wouldn't be surprised if the market does actually jump through here, right? It jumps through and gets above this resistance level, but then it comes back down and starts testing this resistance level again as support. So that's also what can happen with support and resistance, is that resistance can turn into support and support can turn into resistance. So these are key levels that we're trying to look at when we're looking at technical analysis and how are we trading, right? One thing to look at here, where there's no real support or resistance, there's nothing here to stop us. So the market finds comfort in going back up to this resistance or support level here, right? There was nothing really stopping the market from going up, just like there was nothing stopping it from going down. So that's why with healthy markets, you actually do want to see some time and patience go into these markets, because when the market does fall, you want to be able to catch yourself on old support levels and old resistance levels that you created in the past. That's why it's not great when markets shoot up 50% in a few days, because that means the markets are going to shoot back down that much harder in a few days time from then, because there's nothing stopping it from going back down, just like there was nothing that stopped it from going up. So these are the things we got to look at as far as support and resistance. I think these are very key levels that we're going to want to do or take a look at. Now, one thing I also want to show you guys here on TradingView, we're looking at this poor man's volume profile. Now, there's an indicator called a volume profile. You have to have a paid account. I don't have a paid TradingView account, but what I do have is this indicator that someone else made. It's called a poor man's volume profile. And we're going to take a look at that right here. So I added that poor man's volume profile, and what that's going to do is it's going to add this indicator to the right of the market. Now, essentially what this is it's a vertical representation of support and resistance, but it basically shows how strong the support and resistance is at each level. So as you can see here with these orange lines, this is going to indicate a level of strength for the support and resistance. So as you can see, I drew my support level here just a little bit above this orange line and my resistance level just a little bit above. So it looks like I wasn't 100% accurate here according to this indicator. But what this is that it just shows you a vertical representation of support and resistance. So here we had a horizontal representation. This is a more vertical representation to it. And with that, it's able to show you the strength of the support and resistance. So you can have stronger levels of support and resistance and weaker levels of support and resistance. And this will actually show you how weak or strong those levels are, and whether you really need to take caution if the market starts hovering around those levels. So this was just a basic overview of technical analysis, how you can do your trades, how you can analyze the market, different indicators, how to use them, how to access them, and a little bit of a tutorial on TradingView. I do recommend using TradingView for all of your technical analysis needs. There are other charting softwares out there. I think TradingView is the best, and it's only getting better. As you guys heard, they did just revamp their website. So TradingView is trying to become, and probably is, the leader in charting software, and it's a free website. You can use it and look at what other traders are doing as well. But I hope you guys learned something from this tutorial, and we'll see you in the next unit.